Hello, it's Kei from Japan. Today I will introduce one of my favorite indicators. It's Bollinger Bands. And I've been using this indicator ever since I started Forex trading, and I am still using it now. So today I will go over what it's for, like what it really tells you about the market, and more importantly, I will share with you how I use this indicator to get profits from the market in a few different situations. So if you like this topic already, please press the good button. Alright, so here we go. So Bollinger Bands is one of the most well-known indicators among traders across the world, originally invented by John Bollinger. And when you show this indicator on the chart, it looks like this. And this line in the middle is the moving average. It's the simple moving average, and I usually set it with the time period of 20. You can actually change the number from the setting, but this is what I usually use, 20 time period. And on both sides of this moving average, there are deviations 1, 2, and 3. Actually, I only look at deviation 1 and 2, but you can actually show it up to 3 if you would like to. So what this deviation means is that they show the probability of the price to be within the lines of these deviations. And for example, when it's the deviation 1, it's like this on the chart. And deviation 1 means the price, the candlesticks are supposed to be within these lines with 68.3% of a chance. In other words, the price stays within the deviation 1 by 68.3% of a chance. So what about deviation 2? It shows that the price stays within the lines with 95.5% of a chance. And when it's deviation 3, then it's going to be 99.7% of a chance the price stays within the lines of deviation. So on this chart, if you look at the price like here, the candle is slightly outside of the deviation 3, right? And you know it's very rare because 99.7% of a chance the price should stay within the deviation 3. So 0.3 of a chance only the candles will be outside of the deviation 3. So when you think about it, you might go, oh, so when the price goes beyond the deviation 3, the chance of a reversal is going to be very high. So if I place a position towards the opposite direction, then I can make money, right? And like deviation 2 also, when the price goes beyond the deviation 2, then 95.5% of a chance the price should go back inside of the line. So I can do contrarian trade as soon as I see the candle, the price to be outside of the range and make money. Simple, right? And some people actually think this is a real strategy for Bollinger Bands, and let me tell you, it's wrong actually. I have actually back tested this all by myself, but unfortunately it doesn't work that way. Now let me tell you why it doesn't work like that. When the market is in a range like here, it works. It works as a reversal signal, like the price has been resisted or supported by the bands and it goes up and down within the band. But if you keep doing this, you will get a big loss when there's a big trend started on the market. So for example, look at this chart. When there's a big trend like this, imagine you see the chart real time and you see the price exceeded deviation 2 and buy here. So after that, the price keeps going to the opposite direction and you get a huge loss. Then as you keep watching the market, the price exceeded the deviation again, so you go buy again. But the price keeps going down and you lose big again. See? This movement is actually called band walk, as the price looks to walk along between the deviations of the bands. But as you can see, when there's a big trend happening on the market like this, you get loss cut many times when you just think it's the reversal signal. Now, why is this happening? The price is supposed to be within the bands with over 95% of a chance, right? But why it doesn't work that way when the market is on a trend? Well, here's the important thing to remember about this indicator. It's happening just because the prices keep moving. For example, imagine when you try to throw a trash into a trash can. The more you throw the trash, the more the trash scatters around the trash can, and some gets very close to the trash can. Like you throw 10 trash and maybe 4 out of 10 will get very close to the trash can, and the other 4 get a little close, and the rest of 2 are kind of far away from the trash can. And this is the concept of deviation in statistics. You throw trash and some get very close, some are relatively close, and some are not close to the trash can. But here's the key. The stats is effective when the trash can is not moving. But what happens when the trash can keeps on moving on the floor and moving randomly? Then you cannot take the correct samples and get the right statistics, right? Maybe 2 trash will get very close to the trash can, but when it moves everywhere, you cannot take correct samples because the standard does not remain the same. It becomes different. So when you think about it this way in Forex, if you look at a chart and when there's a strong trend like this, you cannot expect the price will be within the deviations because the market keeps on moving. It's moving towards buy momentum. Like let's say when there's a big news somewhere and when people are biased on buying that currency because of the news. In that case, you cannot measure the momentum with the standard deviation because the market sentiment keeps on moving towards buy momentum. That's why you cannot take this indicator as a reversal signals, because when the market moves towards one direction, it doesn't work due to the standard being biased. So how can you trade with this indicator anyways? What I do is I trade by following a trend towards the band expansion after confirming the band squeeze. So let me explain this step by step from a chart. When the band's squeezing, like here, when the bands are narrow and getting close to the candles, and that's when the bands are squeezing. And you can visually see it here, right? In contrast, when there's a trend, the bands are expanded on both sides like this, and when the trend is strong, the price keeps on moving between deviation 1 and 2. Or when it's really strong, it keeps on moving between deviation 2 and 3. And this is called band walking, like I mentioned earlier. And when the squeeze is tight, the tighter the squeeze it becomes, the better the chance of price walks between the deviations. And when the trend gets closer to its end, first, the opposite side of the band start to close. When the candles are on the upper side of the band, then as the trend gets close to its end, the lower side of the band starts to close first, then candles move away from the bands, then upper band start to be squeezed. Remember this order. When a trend gets closer to its end, first the band on the opposite side start to close, then price gets away from the deviation and gets close to the moving average, then upper band start to be closed eventually, and this is how you confirm the end of a trend. So again, how you trade with this Bollinger Band is, first, when you see a range, the band start to squeeze, charging its energy for the next move. Then when it expands, and when the price goes above the deviation 2, that means the market is in a strong trend. So you place buy to expect the price to be towards the expanded direction. Now, there's a way to increase the winning probability for this indicator. If you're using TradingView, there's a tool called BBW. I will put the link on the description below in case you haven't used this platform yet. But what this shows is, it shows the band squeeze and expansion visually with a line like this. And if you are new to the indicator, this must be a very good tool because, as you can see, you can visually see when exactly the band is squeezing the most and when the band is expanding the most in the market. So like I said, when it's squeezing, the market is charging its energy for the next move, And how you can find the charge is simply when you look at the BBW, and when it's on the lower side, that's when it's squeezing. And look for when it's squeezing the most. In theory, you look for where it's squeezing the most within the past 125 candles, but you can just look for when it's really squeezing overall. And let's look at here, for example. It's squeezing very much, right? And so this tells you that there will be a new trend starting anytime soon. We don't know towards which direction the trend will be, but one thing for sure is there will be a new trend coming. So after you confirm the price touches the deviation 2, you can follow the trend by placing positions at pushbacks or pullbacks, or support or resistance of a trend line. What I also do is I check the squeeze in a bigger time frame, like when daily or above, like weekly or monthly shows the squeeze, then that means there might be a big trend starting anytime soon on that big time frame, right? So I check which pair the squeeze is happening in daily or above time frames, and after I confirm it, I break it down to the lower time frames and check the right entry timing. Like when the bands are also squeezing in 1 hour chart as well as daily, then that means when a trend starts in 1 hour time frame, it can be a new trend start in daily time frame also. So that I can expect a big profit with very good risk to reward ratio, because in that case, my entry is based on 1 hour chart, but my target is set in daily time frame. Or here is another trend follow strategy when it's expanding. When I see the bands are expanding in daily time frame, let's say, and when I see the price is band walking between deviation 1 and 2, and if the 1 hour time frame looks to be in a range, then that means when it breaks to the upside, then a trend could continue to the upside by following the daily time frame between deviation 1 and 2. These are just a few examples, but this is like how I apply the Bollinger Bands into my actual trading. And I also combine it with the lines and other indicators to create and increase the probability of winning and good risk-reward ratio. I actually have recordings of my live trades in the past, and in those videos, I explain how I use Bollinger Bands with other indicators with multiple time frames and make profit. So I wanted to go check them out, but on this video, I wanted to explain particularly on Bollinger Bands and show how I use it so that you can learn from it. So again, if you use the Bollinger Bands for your trading, look for where it's squeezing in bigger time frame so that you know which pair is getting ready for the next move, so that when it expands, you can expect a big profit. Or look for which pair is the price is band walking, that means the pair is right on the trend. So when you find the market to be band walking, then try to enter the right timing by drawing the lines, or by confirming if the price has been supported or resisted by the deviation 1, things like that. Then you place your orders accordingly and expect a big profit by following the trend direction. Alright, that's it for today's video. On the next video, I will be talking about how to lose correctly so that you can keep winning. Because lots of traders focus on how to win, but how to lose correctly is also important. So on the next one, I will be talking about some of my strategies regarding how to lose correctly so that you keep winning on the market as a result. So if you don't want to miss this video, make sure to subscribe and hit the bell so that you get notification when uploaded in on Thursday. Alright, so I will see you then. Cheers! またね